Everyone, it is time for Triple Play, and my pick to kick us off is Blackberry, ticker symbol BB. Now, Blackberry's earnings loss was less than expected, so some good news there. Blackberry CEO John Chen said that he expects revenue growth to stay between 8 and 12% in line with the fiscal year of 2022. Now, obviously originally known for its phones, its shift into the cybersecurity space and the Internet of Things is really where the growth is. It's also the market leader in safety-certified embedded software in cars. So you've got Blackberry with you, you just might not know it. Now, Blackberry QNX software is now embedded in over 215 million vehicles worldwide, and that's 20 million more than last year. Among them, BMW, Honda, Mercedes-Benz, and Toyota. Now, regarding car software and cybersecurity, Chen said, given its exciting market opportunities and synergies as the two markets continue to converge, the company is well positioned to invest and drive growth. So, new life there, continuing.
Well, new life there continuing, and new life also for the stock. If we take a look at shares of Blackberry, of course, it's both a software player, a growth player, and technology player, but also a meme stock. So we are seeing a rebound here in some of these riskier assets today. We're seeing that when we look at the NASDAQ composite, and certainly seeing that when we look at shares of Blackberry as well, up nearly 7% on an intraday basis. But shifting gears here, my triple play pick is FedEx. Now, shares of this company are also climbing after some better than expected results posted yesterday afternoon. The company delivered a full year profit forecast that exceeded Wall Street's estimates, signaling it's still maintaining pricing power for now, even amid inflation. Now, FedEx sees full-year adjusted earnings per share coming in between $22.50 and $24.50, which was better than what Wall Street analysts were looking for. However, FedEx did signal that it's baking in expectations for a bit of a slowdown in its business-to-consumer shipping volumes into its forecast for next year. Now, specifically, FedEx Chief Customer Officer Brie Carrere said yesterday that FedEx sees consumer spending, quote, tilting towards services from goods. So, guys, I think this is really an extension of this shift we're seeing in the economy, this shift in consumers really having to prioritize their spending here. And right now, it really is these reopening categories that consumers are a little bit more willing to spend on now. But again, we'll see how much these discretionary purchases actually continue as we have inflation continuing as well.
Yeah, you nailed it there. We talked to an analyst, John Eade, yesterday. I believe that was you guys that spoke with him, who said primarily he's seeing their ability to pass on the high cost of fuel to consumers, which has been a huge win for them, and their partnerships with major corporations around the globe. The two wins that really stood out to him from their earnings. And how about their new CEO, Raj Subramaniam, feather in his cap, taking over for Fred Smith?
I do just want to add that when you think of FedEx, it really is a bellwether company in terms of if people are shopping, more packages. If you think of how logistics is doing, that's also FedEx. If you think of how retailers are doing. So it really does tap into all these things. So FedEx is a really important one to watch.
Well, that's why we're seeing a bit of a slowdown, right, in Europe and China as well in terms of the packages. So, yes, a very good barometer. My play, three of the biggest winners on the S&P to end this week. The big three cruise lines, all big gains today, led by Royal Caribbean. Carnival today reported earnings. Revenue increased by nearly 50%. Booking volumes, though, the key for all future sailings during the second quarter of 22 were nearly double the booking volumes during the first quarter. The company notes these were its best quarterly bookings volumes since the beginning of the pandemic. On future guidance, Carnival, a big day. And here are the gains for the big three on the afternoon. Well, I just lost them here, but let me see if I can get them on the screen. Carnival, about 11-point gain. Royal Caribbean and Norwegian up about 15%. People thought that people were not going to get back on cruise ships because of COVID. It appears we will.
And it's interesting. I thought they were flailing at one point, and now it seems people are back in the mix again.
They were in big trouble for quite some time, but the last couple of weeks, it seems the sentiment has turned.
Well, and I think a big thing for the cruise stocks, too, as well as if we look at the airlines, if we look at a lot of the cyclical names today, we really are seeing a rebound just in the sort of investor sentiment, I think, when it comes to these, because we're also seeing crude oil prices moving lower because of some of these recession concerns. And yet, at the same time, of course, that is something that would benefit a lot of these travel stocks. But again, I think sentiment moving to the upside today, we're seeing the three major indices moving higher, and seeing, again, a rebound across cyclical names, which include these cruise lines.
And you can still get sales because you get on all three websites between 30 and 45% off. So if you do have some travel openings for this summer, check out a cruise. Do you still have a Blackberry? Be honest.
You know,
I was hoping you'd have one here for your triple play.
I am one for the nostalgia. I still have a Blackberry. I still have a T-Mobile Sidekick. I have a beeper still from way back. So one day when I open a museum, you're all invited. I'm keeping all my tech.
The Rachelle Akuffo Technology Museum. Look forward to that opening.